Happy Friday, traders. It's 8:01 a.m. Chicago time on the 1st of May, May Day 2020. This is episode number 1746. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market sentiment's allocation to safety and pulling out of risk as the market has fallen a fair amount. The S&P is down quite a bit this morning, 60 points or 2%. We talked about this yesterday before the open. Crude has pushed into the 20s. The 20 handle up 1.26%. 1.2 $26 up 6.69%. With the bund, the yen, and the euro following. The bonds are off 4 ticks. The 10 years are unchanged on settlement. The laggard today is the euro stocks down almost 3%, or 88 points. The DAX follows down 296 points or 2.67%. And the Russell's off 34 points or 2.66%. Again, clearly risk off. The gold has dropped below the 1700 mark, trading at $1,687.90, down 6.3 dollars or 0.37%. So just remember that today is a holiday for several countries. Again, it's the May Day holiday. And so we may see a little bit of volume lightening up. I think we have that already in our overnight session, given the amount of selling in the S&P. The overnight session is a little bit light, but we'll go over that here in a minute. In terms of the news calendar and all that stuff this morning, really nothing incredibly new. The calendar shows that um, um, there's really nothing to talk about. ISM this morning, we have market manufacturing PMI 15 minutes after the open. We have ISM at 10 o'clock. ISM manufacturing and then construction spending. So just keep an eye out for that. And then that wraps up the week. Actually, yeah, the DAX, I quoted the DAX and the Euro stocks, but that's from yesterday. They are closed. I just got done saying they're closed, and here I am quoting them off my quote board. That's not a very smart thing to do. So they are closed. So this is old news. Thanks for that. In terms of the calendar, that's all we have for today. We're going into the weekend. Um, Let me check something here real quick. Looks like I mistakenly closed a window. Recall that the federal restriction on the stay-at-home guidelines ended yesterday with April 30th, and the president's not renewing them for May. And he's threatening, Trump is threatening to take action against China, for spreading this pandemic and not warning everybody. I have some thoughts about that, and I won't share them here because it's not relevant to the trade. But overall, we sold off. We are rolling over as expected yesterday. So here's what I was looking for yesterday in our review segment. I was looking for a push higher to sell into. A push higher to sell into between 24 and 28 yesterday. 29.28 was looking for a test 28.92 for the bounce. That's the primary scenario. The secondary is a push into a kind of a squeeze into 28.92, bounces back up, comes into 24 and holds sideways. This is what we actually got. We squeezed down. It looked like scenario 2 was in play. We squeezed down to 28.92. We stopped at 28.90. 28.93 right here. As you can see, the low is 28.93. Before we bounce back up to 20, we could not hit 24, 28. And before we sold off, we had a very clear failed auction. Once the initial balance was put in, it was relatively choppy morning yesterday. The initial balance was broken to the upside, and then we get this impulse down. We get this impulse down immediately. Before that, the push higher pulled back into the mid. You could see it right here, the blue line, for a small continuation. The market kept holding the mid, as you can see here, the mid and VWAP on top of each other, and created some scalping opportunities. And before this failed auction, this is a classic. If I was to take an illustration of a failed auction on a test higher, this is what it would look like. A poke through the first hour's high and an explosive move in the other direction, a big impulse down, pulls right back to the OS high, and then is not able. And then we get the second impulse. So now we're looking for what? What are we looking for when we get this big impulse down? Because I don't want to speak in the hindsight all the time, but once we get this, what are we looking for? I'm going to give you a little bit here to answer that. If you've been paying attention, what's the trade we're looking for? I'm giving you a trade here. As I sip on my tea, okay, I can't wait any longer. The lag is just too big. We're looking for a test of mid, right? We're looking for a test of mid. And in this situation, mid and the prior um, low coincided, and so there it is on the nose, hits the mid on the nose, and then starts to rotate back down again towards that 28.82 area. We hit 83. This is the next stock zone. These gray areas, for those who don't know, these gray areas are called stock zone levels. That's a trademarked term. These stock zone levels are pre-designated areas to do business. This is where I'm looking to for the market to respond, and as a result, I'm also looking to respond there. And so early on we hit. If we go back a little bit, you can see that it hit the first stock zone at 28.92.50 by getting into 28.93.50. It hit the upper stock zone at 20, and then it broke through. Once it broke through, it went to the next stock zone. This one got respect early on a retest. They're kind of like Kleenex, not for reuse. I could be more vulgar, I guess, with some other examples, but um, it moves down to the next stock zone, and now we get the test of the mid, and then it just consolidates sideways. The mid is really targeting the low as a key target, but you take your scale outs as we go along, and then it just goes sideways and sideways and sideways, and that was that. If you look at the profile yesterday, it was neutral, normal. The day was neutral, normal. We broke the first hour's high. We broke the first hour's low, also called the initial balance, and we finished in the middle. The profile is a pretty active price discovery in that range, but it was really in balance, and the value area is valid from yesterday. So pay attention to the value area today is what we're coming in with. But the fact is, we had sold off. If you recall yesterday, one of the big things I wanted to point out to you yesterday for those who are here is that this is likely to top out. Do you recall what the targets were for that topping out? In fact, I might have it in here in the captions. Um, I talked about it dropping over, turning over 2,900 on deck, but I put it in here. I put down the levels below the 2870, 28.50, and then an extended target. I forget what I mentioned here. 27.89. 27.89 is the big extended target below, as you can see in this caption, this auto-generated captioning. 27.89. I was looking for this thing to just roll right over, and here we are this morning trading much lower. So you can see how it's curving over. There we go. See that nice little barrel right over. This is what I was looking for. And we have a low of 28.30 this morning, 28.30.75, and we continue pushing. So the overnight session had 311,000 contracts traded. That would have been a lot heavier. That would have been a lot heavier had the European markets been open. Given the selling, we did gap down a little bit on the reopen for the session. We made an attempt higher, hit the low of the prior day. We pushed basically back into that 83 area, and then sold right off. The Europeans came in, or well, didn't the Europeans never came in, but sellers during when the Europeans would have opened came in and really sold this thing off. And what we have yesterday is a B-shaped profile. This is long. This is long liquidation, and with the point of control at the low end. So the expectation coming into today is it's likely to challenge that 28.30 down. That's what the overnight is showing. We stayed well below the mid. The mid is this blue line. We stayed well below the mid, and we kept challenging the low, and now we're flagging. We've created a bear flag. We have a move down, and we've created a bear flag with the point of control at the low end of the range. We may see a bounce right at the open, but overall, I'm expecting it to continue lower. Let's take a CT book map. As you can see, when Europe opened, we did have some liquidity that was sitting in here in the 28.50, 28.45 area, and that was hammered through. I mean, we've got some pretty good selling delta here. And what we did is we broke through, and those of you who've seen my heat map or book map videos might recognize this pattern that it breaks through, and we have these big collisions. And then what does it do? It either collides and holds, so you have an iceberg here, and it bounces back up, and then it pulls back to that area before it decides whether it's going to go up or down. We never know. Or it breaks through. The most common thing is it collides, breaks through, and then does what? It pulls back to that collision area, gives an opportunity for a sell. This is where those who are long are likely to cover for a scratch or as close to scratch as possible. And we're looking for a continuation lower, which this got a little bit, but overall it just stalled out and then is sitting sideways. There's some liquidity at 28.25 below, resting. The big liquidity up above is at 28.78, which is near the high here put in after the reopen, and then 2800. So my expectations this morning is we challenge at 28.25. If we break through, then we're looking at 2800 for 25 points. This is what things look like. The liquidity does coincide with last week's close. It coincides with various stock zones. And so I'm going to be paying very close attention to the sell side this morning. Buyers, given that inventory is short coming into today's session, I expect the buyers to be a little bit active. Coming into today, I do not expect them above 28.60 to 28.65. So if buyers come in to balance the book here, take profits, I expect that this area right here is likely to pose a challenge, if not 28.65. If it goes beyond here, then we are likely to go back and challenge that 2880. And so that's where we stand this morning. In terms of what's expected for today, let's switch to what the current session has in it. So for today, with a big gap down, here, boom, we are opening well below the range in a gap. I do have in my stock zone chart, I do have this profile, which I'll draw here. You can see where the attraction is, 2873 above, and then above there, 2907. So what we have is a multiple distribution profile like that, but we have a very, very clear low volume node right here at 2881. This is where we stalled out yesterday, 2883, and that's where that stock zone is. So let me turn on the stock zones. So this area, this price right here, this 2883 is going to be quite important on a retest higher. It's likely to stall out in this 2873 area. This morning, I'm expecting it to open. I'm looking for responsive buying into the 2860. I'm expecting it to stall out here. Remember, 2860 has a little bit of liquidity that's kind of fresh, so I'm not going to lean very much on that, but I'm expecting the market to stall out here and then roll over, take out the overnight point of control for that stat, and then start working itself down into and towards the overnight low, which is around 28.30. I'm looking for that low to be taken out this morning, 28.30. And then I'm looking for the market to rest up, consolidate, and finish somewhere near where it opened this morning. I'm not expecting a trend down. I do see that the market is likely, as I talked about yesterday, it is likely to move the point of control down. I discussed this with you yesterday, that we're likely to move value and the point of control down. That's these maroon lines. And it did. And then today I'm expecting it to do the same. I'm expecting that a gap zone will likely remain open. The probability of filling that gap, last I looked, historical probability over 2,500 days is around 18.1% historical probability. But we've seen those fill pretty good from below versus above. And so that's where that's the primary scenario. The secondary scenario is actually the opposite, where we have sellers coming in with the point of control near the low of the session. We have the sellers coming in, testing the overnight point of control, and then impulsing up and squeezing back into the 73 and then taking out that 83 area before stalling out and coming back into the prior day's range to balance out up here. In either case, we're shifting value lower. The market is likely to continue seeking lower. The weekend's a long period of time for the market, for market participants to wait to price in new information, and news is so dominant and so prevalent with so much information coming in. Some states in the United States are opening up and removing the restrictions, the stay-at-home and quarantine orders. And so we're expecting to see some of that kind of resolve itself this weekend. So I'm expecting that Friday or Sunday night at 5 Central, 6 Eastern, when the futures open, I'm expecting a decent sized gap. I'm expecting the market to respond to that. The market is really, really, really anticipating the opening of the economy. So I'll leave you with those thoughts. There is a scenario 3 and 4, given that we're in a gap, but this has been gone on long enough. I want to remind everyone that it is the weekend. Please mind your risk. This is really important to not come into the weekend with a big loss. Don't fight the market. There isn't one trade. There isn't a single trade you can take. As beautiful a setup as it is, there isn't a single trade that you can take that is worth defending with a big portion of your account. Make sure you're only risking a small portion per trade, because your goal is to buy. Your stop is buying you the chance to see if your bias, directional bias, entry point, stop size, and exits are in alignment with what the market wants to yield. And the way we find out how these four things play out, the way we find out is we pay through our stop. And our goal is, if we pay enough and we keep our stop small enough, if we pay enough, that we are likely to get these right better than half the time, plus covering costs, right? So coming into Friday, I've seen people just implode coming into the weekend defending a position. Please remember, it is like Friday. If you're on YouTube, please hit the like button. I would appreciate it, and I'll catch you soon. Don't forget that if you're looking for a brokerage, or if your broker didn't inform you about the connection issues and the new rules related to the CME and connectivity, they should have informed you. That's your broker's job. If you're shopping around, please support my brokerage called EdgeClear. Please visit edgeclear.com and open an account. Trade through us. There's a lot developing, and your support and becoming a member helps us develop those things better and more quickly. Take care.